A quiet global shift. Are currency exchanges preparing for a major Iraqi dinar development? Across several countries, subtle but meaningful changes are taking place behind the scenes, changes that may signal a major shift in the financial world. Currency exchange centers, often known for their routine pace and predictable operations, are suddenly transforming. They're updating technology, retraining employees, and extending hours in preparation for something that appears far from ordinary. For those who have followed developments surrounding the Iraqi dinar (IQD), these movements could mark a defining moment. October 2025 might be remembered as a month when long-standing speculation began to take visible form. While few have noticed, or at least publicly connected the dots, the evidence of coordinated preparation is increasingly difficult to ignore. Exchange offices in the United States, Canada, and parts of Europe are engaging in unprecedented modernization efforts. Staff training sessions, technology installations, and internal policy changes are all converging around one specific focus: the Iraqi dinar. The scale, speed, and synchronization of these upgrades hint that something significant may be approaching. The global pulse. Exchange centers on alert in recent weeks. Multiple exchange companies across major cities have launched intensive training programs that far exceed standard currency procedures. Employees are being educated on advanced note verification tools and the proper handling of Middle Eastern currencies, with special emphasis on the dinar. Reports suggest that these sessions span several days, featuring hands-on exercises using new authentication devices capable of instantly confirming note legitimacy. These systems, designed to process higher volumes of transactions and detect fraud, represent a substantial leap in technology. Such investment is rarely coincidental. Currency exchanges, like any business, make financial decisions based on projected demand and expected changes in the marketplace. When numerous centers upgrade at once, across state lines and even international borders, it signals a shared sense of anticipation. Why October and why now? Historically, October has been an influential month for Iraq's economic calendar. Many of its budget announcements, fiscal adjustments, and monetary policy updates are introduced during this period. The trend continues in 2025, but analysts say this year's activity feels distinctly larger in scope. Exchange centers are not just offering refresher courses, they're rebuilding their infrastructure. Financial institutions are deploying new computer networks that include enhanced security modules, specifically tailored for IQD processing. These upgraded systems can check exchange rates in real time, handle more simultaneous transactions, and directly connect with global financial networks. Some systems even incorporate AI-driven fraud prevention, automatically flagging irregular activity and ensuring compliance with anti-money laundering standards. Such technology requires months of planning and considerable capital investment. The question then becomes, what are these businesses expecting? Currency exchange operations are, by nature, risk-averse. They do not spend heavily without a clear business case. The synchronized nature of these changes, particularly in U.S. states such as Texas, Florida, California, and Arizona, suggests more than local initiative. It points to coordination, or at least shared expectations within the industry that demand for the dinar may soon surge. Signs of readiness in North America and beyond evidence of this quiet readiness is emerging across the map. In Phoenix, newly hired employees are receiving specialized instruction in Middle Eastern currency handling. In Miami, upgraded scanning systems capable of authenticating high-denomination notes are being rolled out. In Canada, select centers have overhauled their operational protocols, adding multi-stage verification for all dinar transactions. These may sound like small procedural tweaks, but collectively, they signal that the sector is bracing for larger-scale activity. Many centers have also renewed contracts with armored transport companies, an indication that they anticipate increased movement of cash. These are tangible, documentable actions, not mere speculation. Currency businesses typically respond to market data, not rumors. When multiple firms act simultaneously, it's almost always because something in the underlying environment is changing. The alignment is unusual. Normally, each exchange operates independently, adjusting only to its own local market conditions. Yet this time, the same behavior is repeating across cities and countries. That level of coordination implies shared information, or at least shared expectations among decision makers. Behind the upgrades, anticipating greater volume industry insiders have suggested that exchange networks might have received internal advisories to prepare for increased IQD activity. Others interpret the moves as part of a wider modernization wave connecting traditional fiat systems with digital platforms. Regardless of the precise motive, the Iraqi dinar appears to be the common denominator. When an entire sector invests in better systems, hires additional staff, and expands capacity in unison, it's a clear sign of anticipation. It's worth noting that October has often served as Iraq's turning point for fiscal and policy announcements. Each year, the country releases key budgetary frameworks, introduces reform packages, and occasionally adjusts its foreign exchange procedures during this month. In 2025, the groundwork, from domestic reforms to international partnerships, appears more mature than ever before. Infrastructure investments abroad may therefore represent readiness for possible policy changes within Iraq itself. If the Central Bank of Iraq, CBI, were to make adjustments to how the dinar is traded or valued, global exchanges would need to respond immediately. The steps we're seeing today suggest that readiness is the goal. Iraq's strengthening economic foundation. Iraq's economy has grown more stable in recent years, which strengthens the plausibility of major monetary reform. Oil production remains steady, inflation has eased, and new partnerships with international financial institutions have taken shape. The CBI has continued its campaign to stabilize the currency, tighten banking oversight, and attract foreign investment. These improvements build the credibility necessary for deeper integration into global financial systems, a crucial prerequisite if Iraq intends to modernize the dinar's international role. For years, speculation has swirled about a potential revaluation or rate adjustment, though officials have consistently urged caution. While no confirmed revaluation has occurred, the current wave of operational changes suggests that many institutions want to be prepared for any eventuality, whether it's an adjustment, new exchange mechanism, or digital integration effort. Technology and transparency. The new frontier, the next generation of exchange technology, now being deployed across multiple regions, is remarkably sophisticated. Advanced scanning hardware can identify notes, confirm authenticity within seconds, and synchronize automatically with global rate databases. Transactions that once required manual verification and long processing times are now nearly instantaneous. Some systems can process hundreds of transactions per minute, while simultaneously flagging irregularities for review. These upgrades don't come cheap. Large centers report spending hundreds of thousands of dollars to modernize, a move that makes financial sense only if they expect a clear return on investment. The shared timing and scope of these upgrades indicate that confidence in future IQD activity is growing rapidly. Small and mid-sized businesses are also joining the modernization wave. They're purchasing updated counting machines, installing security cameras, and implementing digital record-keeping tools to meet new compliance standards. The entire sector, from large exchanges to local outlets, seems to be positioning itself for what could be a surge in Iraqi dinar transactions. Global consistency and international coordination. The phenomenon is not limited to North America. Reports from Europe and parts of the Middle East mirror similar patterns: training programs, infrastructure investment, and enhanced authentication protocols centered on the dinar. This level of international consistency suggests a broader effort, possibly tied to global financial system updates or new settlement procedures involving Middle Eastern currencies. Large banks and cross-border financial networks are likewise improving their digital systems, emphasizing transparency, anti-fraud monitoring, and real-time transaction tracking. While public statements from major institutions remain scarce, the quiet but visible operational movements tell their own story. Something is motivating companies around the world to prepare simultaneously for changes connected to Iraq's currency. The compliance factor, another major driver behind these system upgrades, appears to be compliance and regulation. The new generation of financial software includes built-in reporting tools to satisfy anti-money laundering, AML, counterterrorism financing, CTF, and tax compliance requirements. Exchange centers are advising clients to keep complete documentation of their dinar purchases and sales, including receipts and certificates of authenticity. As oversight tightens, having verifiable proof of ownership and transaction history will become essential. This evolution towards stricter compliance underscores that the industry is maturing, shifting from loosely monitored operations to a more professionalized, transparent system. It also reflects confidence that higher transaction volumes are coming and that regulators will demand accountability as activity increases. The broader economic picture, the readiness of exchange centers, aligns with Iraq's current economic environment. The country's oil exports remain strong, public finances are improving, and major reconstruction projects are injecting new life into domestic industries. International organizations, including the World Bank and IMF, have recognized Iraq's fiscal reforms and growing reserves. These developments have bolstered the dinar's stability and gradually increased international confidence in Iraq's financial institutions. Furthermore, Iraq's expanding relationships with neighboring countries and foreign investors are opening new trade and currency channels. As the nation continues integrating into the global economy, improved infrastructure for dinar transactions abroad would be both logical and necessary. Business logic over speculation, despite the excitement in certain circles. It's important to stress that exchange centers operate on business logic, not market rumors. Their decisions are grounded in data, volume trends, policy projections, and regulatory signals. When businesses across an entire sector upgrade their systems, hire additional staff, and implement specialized training focused on one currency, it's an operational signal. It indicates that those in the industry believe increased demand is coming, even if the precise trigger remains undisclosed. No one invests heavily in new infrastructure on a whim. The fact that this activity is happening simultaneously across multiple regions adds weight to the observation that something larger may indeed be approaching. A potential turning point. October has historically marked pivotal transitions for Iraq: the adoption of new budgets, the implementation of reforms, and occasionally, changes in how the dinar interacts with the global market. With 2025 shaping up as one of Iraq's strongest economic years in recent memory, many analysts suggest that the current synchronization of upgrades abroad could be the prelude to an official monetary development. Whether that means a revaluation, policy shift, or expanded accessibility of the dinar through international banking networks remains uncertain. Yet what's clear is this: financial institutions and currency exchange centers are acting as if they expect movement. From high-tech authentication systems to increased staffing and compliance modernization, the evidence of preparation is widespread. Reading the signals while speculation should always be approached cautiously, patterns in business behavior can often serve as early indicators of significant change. The synchronized upgrades, staff expansions, and renewed contracts are not random acts. They are strategic adjustments. Each upgrade, each training session, and each investment in new technology builds a picture of readiness. The message from the industry is subtle but consistent: be prepared for higher Iraqi dinar activity. Whether that translates into a new exchange rate, expanded international convertibility, or simply greater trading volume, October 2025 could indeed mark a milestone in the dinar's modern history. Conclusion: the global financial environment surrounding the Iraqi dinar is clearly shifting. Across the US, Canada, Europe, and beyond, exchange centers are modernizing at an accelerated pace. Their collective focus on IQD infrastructure, staff readiness, and compliance reform reflects not speculation but preparation. Iraq's growing economic strength, coupled with coordinated operational upgrades across multiple continents, suggests that the stage is being set for a change, perhaps the most consequential in over a decade. For currency watchers and dinar holders alike, the coming weeks may provide clarity on what exactly these quiet preparations have been anticipating. Whatever the outcome, October 2025 is shaping up to be a defining month in the evolving story of Iraq's currency and its place in the global economy. Disclaimer: all content provided by IQD Global Intel is for educational and informational purposes only. We are not financial advisors and do not provide investment, trading, or banking advice. Viewers should always conduct their own research, and consult with a licensed financial advisor before making any financial decisions.